If you're looking for a funder to fund your investments, if you're looking to raise money for real estate developments, existing multifamily real estate, you're looking to buy a business and find funding for that, there are 5 things that will almost make it certain that this investor is right for you. And what are these key 5 things? What am I talking about? And who am I? Who is this guy on the screen? My name is Nancy Myers. I run a company called Race.com, where we've been involved in over $300 million of private equity capital raises, debt raises, and fulfilled on millions of dollars of closed transactions. So with this, let me get into it. So the first 4 are pretty standard, and the last 5 is kind of tricky. So in doing this, we looked at the call centers that we set up, and we looked at who invests and who doesn't, and who wastes time and who does. So the first one is making sure that a person is qualified in terms of having the money to be able to invest. This sounds obvious at first. There are actual laws from the SEC, to those who aren't familiar, the government agency in the US that regulates investment, the SEC. The most popular rule is the Regulation D 506C rule, where nearly $1 trillion per month flows through this specific set of rules. In other words, an exemption from requirements to register with the SEC. So basically a bunch of rules that allow you to raise money in the US from people that are called accredited investors. So accredited investors have over $1 million in assets alone, $5 million in assets with a spouse, make $200,000 per year or $300,000 per year with a spouse. And this is important because it means that they have the money that unfortunately can be put at risk to some extent, depending on the suitability for them investing. So let's say somebody is looking to invest a little bit of their net worth into real estate, and the person is open to that. You know, they don't lose like their life savings overnight, and they're willing to have some of their money illiquid, meaning that they can't get it back right away and they won't suffer. So I'd make sure that they basically have money and know what they're willing to invest, what their check size is. That's the first thing, and the obvious thing that everybody gets right. But after this, everybody forgets the key main things that are the usual suspects. Like the second one being if they have the authority to invest. Because a lot of people, time and time again, they try to ask me, oh, I want to find this investor, and they're not sure if they're qualified or who's making the decision. So you have to know who's making the decision on the investments. Usually if it's a big private equity fund, or you usually have a team that makes a decision, and there's a junior that is the underwriter, and there's this whole process. If it's a smaller check deal where you're just raising like 20K per investor or 10K per investor or 100K per investor even, sometimes it's just one guy or gal that invests. So you have to make sure you know who the decision makers are and you understand the decision-making process so that you don't get disappointed. So because some decision-making processes are very long, some are short, but something that some people don't look at is also the time frame in them making that decision. So that's the third one, is how long will it take for them to make a decision. So some people are ready to invest today, but the other 97% of the market in any given market is not ready to do any business today. They're just ready to learn, and that's normal. There's nothing wrong with that. But the thing is that when they are ready, you want to be a person that's the top of mind because you've given them value. You've built a relationship with them, and then you are the one who can solve their problem. And so that brings us to the fourth one. Are you able to solve their problem? Are they open and willing to deal with your business model? Because if it's an irrelevant investor that isn't interested in your particular investments, then you're wasting your time. Like you get a real estate investor, why would they want to invest in SaaS if they don't want to invest in software? So you have to make sure that they fit your ideal criteria. And ultimately, you do all these things, and logically, you do everything that you can, especially for the small check investors. And for whatever reason, they're just saying no. They're just not moving forward, or they're ghosting. The fifth one is a little known one where Google did a research that showed, based on all their data, bear in mind, Google has most of the website tracking data in the world because there are pixels installed in over 50% of all websites in the world, whereas Facebook is installed in less than 10% of the websites in the world. And Google study said that over 7 hours of video content online has to be watched for somebody to be able to purchase anything and feel comfortable doing so. 11 different touch points have to be done as well. So this could be a text, email, phone call, in-person meeting, etc. So you have to be talking to people consistently for you to be able to build that emotional rapport, because there's a subconscious bias that people have in their brain, the part of the brain and the nervous system called the limbic system, where people associate emotions and feelings with things, and it's very subconscious thing. Some people are very logical in the B2B world, but really we have limbic systems and we have emotions, unfortunately. So that's why people who aren't familiar with you, who don't know you, that's why people always say, I don't invest with people I don't know. All that means in English is, I don't know you yet. So you just have to warm them up. And when they say I have to know you, all they're saying is that they want to be more familiar with you. And so all that means is that they're being more upfront on telling you that they are they are open and willing to meet people, and they don't know you yet. Every no that you get from an investor or a funder, if you look at it as a no, you should see it as an opportunity. And if somebody tells you, no, that's not my mandate, then you want to figure out what their mandate is for another deal that you can get that fits their mandate. That's why you don't want to be the type of person that is married to a deal, because if you're married to a deal, you also get divorced from it if you can't fund it. So you want to be able to be in a position where you can always get a deal for the right funder, compliantly, legally, of course, and you're just not in a desperate position. So if somebody says, no, that's not my mandate, get something in their mandate. If somebody says, no, that's not the timing, with their consents, put them onto some sort of relationship management system where you're sending them emails, sending them physical mail, meeting them in person, inviting them to golf events, inviting them to webinars, because when they are ready, they will think of you first. You know, if somebody's not a decision maker, find out who the decision maker is. And if they're not associated with any decision makers, get them on a referral. If you can legally do so, get them on a referral. You know, if they're not an accredited investor, or they don't have the money to invest, make sure that you find a regulation that allows you to accept their money if you can actually solve their problem. And ultimately, if people are telling you no, make sure you find out why and find out how to solve people's problems so that they say yes. So it's annoying to get a no, I get it. But you don't make millions and raise millions from the people that tell you no. You raise millions from the few that tell you yes. So use the no's as an opportunity to get to a yes. And look at it as a stepping stone to get the yes. That's all you have to do. So with this, if you want to implement some of the things that I said, we have a proven call center system and people that set up deals and prepare offerings for people looking to raise capital in all industries, but mainly in real estate and business acquisitions. But if that's something that you'd like to discuss with our team on a one-on-one free dive call, just go below with the call. And if you want to promote the sharing of information, hit like and share for this video so that we can see you in the next. Cheers.